Hello everyone, I'm Sari Puspita Dewi, student identification number C1C0211022. I am from Class A Accounting 2021. Here, I will make an English practice assignment about terms in accounting. Okay, let's go straight to one, namely 1. Account. The account is accounting medium to record financial transactions that result in change in assets, debt, capital, income, and expense. In the recording, the account will be classified based on similar transactions. In the end, the recording and classification of the account will be used as a basis in the preparation of financial statements. 2. Balance sheets. A balance sheet is the part of the financial statement of a business entity or company that records information about shareholders, assets, liabilities, and equity at any given time. This report must be made by a business entity or company because it becomes a guide in deciding business decisions. 3. Assets. Assets are all wealth assets owned by a company that can be converted into cash. The wealth in question is a resource that can be in the form of object or right that are controlled and previously obtained by the company through past transaction or activities. In a business, example of assets or asset can include cash, machinery, property, inventory. 4. Debit. Debit is an accounting record in which assets and costs increase. Debit is usually on the left side and asset accretion can be in the form of additional money, tools to intangible things directly such as rent or receivables. 5. Credit. The term credit itself is an accounting record for debt and equity accounts that have increased. Ordinary credit is located on the right side, and if the asset to expense is in the credit position, that it means a reduction in the value of the account. 6. Cash flow. An increase or decrease in the amount of money a business, institution, or individual has. In finance, the term is used to describe the amount of cash currency generated or consumed in a given period. There are many types of cash flow, with a variety of important use for running a business and conducting financial analysis. 7. Obligations. Liability is a process that starts from the purchase or procurement of goods or service on credit as evidenced by valid documents until the process of settlement or payment of the debt in questions. Obligation based on the maturity time of completions are classified into two parts, namely short-term obligation of a maximum of 1 year and long-term obligation of more than 1 year. 8. Entity. An entity is a business unit or accounting unit. Finance, meaning that in accounting there are finance statements included by each business unit or entity referred to as an accounting unit. More precisely, with the economic activities or activities of the unit as its focus. 9. Invoice is written evidence from the sellers about the list of shipments of goods purchased by buyers, complete with the name of the goods, number, specifications, quality to price. Invoices are made at least 2 copies, one for the buyers and one for the sellers. Invoices carried by buyers are called purchase invoice, while invoices carried by sellers are called sales invoice. 10. Diversification. Diversification in finance is a method of trying to protect an investment portfolio by reducing exposure to risk associated with any single asset or group of assets. A diversified portfolio includes different types of investments that typically respond differently to the market. A diversified portfolio can contain shares in companies across a variety of industries and geographies. Thank you. See you next time.